I think it's a very sensible thing. And actually, it's setting up for something I think a little more complex that I've got my eye on. Is we've got an issue that staking is going to rise in ETH because it's got a good yield. It's reasonably understandable. So it gives us some sort of risk-free rate within the space. The issue is you've also got the ETH burning, and you end up with a very limited supply of ETH in a bull market. Now, I understand that that as the cost of compute goes up, what you end up with is less burning over time. But there is an issue that you could end up with a very squeezy market, and it could be a problem for ETH, actually.
According to Raoul, a former Goldman Sachs executive and founder of Vision, the crypto industry has the potential to reach 1 billion or more users in the next bull market. With the surge in capital, he expects the industry to attract the next batch of users and bring innovation that could lead to applications that haven't been thought of yet. This includes digital identity, Web3, decentralized finance, and non-fungible tokens. He also predicts that the Federal Reserve will likely reverse course and print more money to send markets higher, as they did in 2019 after the pivot in 2018. Raoul also discusses the risks involved in staking and the Bitcoin halving in the crypto markets.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The whole crypto market is driven by two things: network adoption, which is the long-term trend, and then in the middle is the liquidity cycle. The liquidity cycle hit a bottom in June, and we started seeing the forward-looking indicators come up. And we've seen already the central bank balance sheet was led by China, Japan, and then the US. That liquidity cycle is in full flow now. So that should continue all the way through till 2025. And that's why we started Crypto Spring. It happens every time we get to this point. So forward-looking, the liquidity cycle should continue. And the banking situation is one of the examples of how the liquidity cycle comes in. The Chinese continue with M2 growth, the use of the central bank balance sheet. The Japanese have obviously been using yield curve control. So for me, we're in the right cycle now, and this should continue to play out. Now, within those, you get plenty of volatility. Usually you get 35% pullbacks are pretty common. Is this a 35% pullback we're in the middle of, or a shorter one? Don't know, don't really care. I did all of my allocation. I haven't sold anything ever. I just bought more in June, October, and January, and just used that opportunity into the big sell-offs, and that's it. The tightening, it's not about interest rates, it's about liquidity. So the change in interest rates is a part of the liquidity cycle, but the central bank balance sheet is the predominant driver plus M2. There is about a 90% correlation between the price of crypto assets and a global liquidity index that we use, which is a function of the G5 central bank balance sheets plus the Fed balance sheet. Look at the G5 central bank balance sheets plus their M2. So look at the central bank balance sheet there with the Fed, and you saw that little spike, which was the injection of liquidity into the banking system, and all assets rose with that. And so, yeah, the interest rate rises are a red herring at this point. It so happened that Bitcoin was launched exactly at the time that global interest rates went to zero. Everybody reset their entire interest rate and their entire debt burden at the same time. Everybody around the world. So every central bank, every country, every corporation, everybody reset rates at zero. It's created, and most of that debt is between 3 and 5 year debt. And what you've got is this 3.5 year cycle to 4 year cycle, and it's a global phenomena. And it was driven by interest rates being zero in 2009, and that is the Bitcoin halving cycle, because Bitcoin was launched exactly at that point as well. So the liquidity cycle is the predominant driver. Now, doesn't mean it's wrong to follow the Bitcoin halving cycle, because it happens to be the macro cycle as well. And that's all well and good. And if people understand it in those terms, that's fine. But it is actually the liquidity cycle that is global. And it is a complete structural change to the world that happened after 2008. That if you look at the ISM cycle, so the Institute of Supply Managers survey, it is exactly 3.5 year cycles. And we've never had this before. And it's just driven by the debt refi cycle globally. And people will move on the risk curve depending where you are. So when you're in crypto spring and there's uncertainty, you go to the safest, most secure, most known asset and the most liquid, which is Bitcoin. Then you tend to then spill out, and you see then Ethereum start to catch up. But as people become more confident in the cycle itself, you see it spread further out of the curve. And you're starting to see that already. I mean, Solana had a huge run this year. There's a few things that have had a huge run. It's not consistent yet. So it's very common that the Bitcoin dominance falls. It's the same in the credit market. People buy treasuries first, then they buy corporate credit, then they buy junk bonds, then they all blow up and we start all over again. I mean, it's a standard way that we operate. So it's very common. So crypto is no different than financial markets.
The leading cryptocurrency, Bitcoin, is attempting to establish a solid foundation above the $27,000 position, following its failure to sustain gains above the $30,000 mark. Pseudonymous crypto analyst El Crypto Prof suggests that the losses might be short-lived, pointing to historical data that indicates a potential bull run for Bitcoin following the end of smart money accumulation, signaled by the QQE surpassing zero. Crypto trading expert and analyst Michael van de Pape points out that Bitcoin is still facing crucial resistance at $27,800, projecting that a lower test could lead to bullish divergences and open up opportunities for long plays toward $28,700. Despite a short-term pullback after plunging below $30,000, Bloomberg senior commodities strategist Mike McGlone remains bullish for the long-term outlook of Bitcoin. Author Robert Kiyosaki predicts a massive bull run for Bitcoin, as more people warm up to the top crypto asset, and believes it is fundamentally sounder than traditional financial institutions like banks. The outlook for the crypto market in Q2 remains uncertain, with both bullish and bearish indicators present. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.